Hello friends, this is Raj Sastry from Raj Option Trading. Today is January 6, 2022. Let's talk about top stocks with the heavy insider buying. So when the stock is down and the insider buys their own stock, that's typically a turning point for stock to go higher. So with that, let's look at few companies and go from there. So we got two companies featured today. One is Incyte, which is a biopharma company with a lot of cancer drugs, and we got Twitter, which everybody knows. So with that, let's jump in and get started. So as you look through here, this is a list of companies with the heavy insider buying. Top of the list, we got Twitter. As you can see here, Twitter has got a nice insider buying. And as you can see here, stock has came down pretty significantly off late. Right now, it's about $39. And as you can see here, very heavy insider buying here, 333%. And they got a nice sales, as you can see here, and also nice sales growth. One of the issues, they got it's a net margin negative company here. End of the day, they're not making money. That's why Wall Street does not have too much patience when the net margin is negative. And when it comes to price to sales ratio or valuation perspective, it's not very expensive. It's a little bit expensive, 7 as of now, but not too pricey compared to other internet names here. They've done solid 134% in the last 5 years from a performance perspective. And from a Morningstar perspective, they get a grade C in financials, growth, and profitability, which is middle of the road here, nothing significant here. So with that, with the new CEO here, Parag, company can turn a corner here with the heavy insider buying. And next we look at Incyte. Incyte is a great biopharma company. They got a lot of cancer drugs and also a lot of pipeline candidates. Look, there is a very heavy insider buying here, 174% insider buy here. And also as you look through here, they have not done great from a performance perspective in the past, but now with the pipeline in the lot of drugs in the pipeline, the company can turn a corner. On the positive side, look here, they got a nice A grade in the financials and B grade in growth and profitability D right now. But as you can see here, net margin positive company, and also from a price to sales ratio perspective, from valuation perspective, this stock is not pricey. And then you got few more here, Stitch Fix and Signify. As you look through Stitch Fix here, stock has been down off late here. Look, companies, right now it's losing money, but not too much. And price to sales ratio is right now 1, which is very low. I would say, you can also take a look at this company slowly as it gets battered in this Wall Street rotation. We could slowly buy Stitch Fix. This company also provides, sometimes it goes higher, especially given there is a high short ratio of 15% on Stitch Fix here. And then you got Signify Health here. Again, it's a one more company with a high insider buy. As you can see here, 11% of the insiders are buying their own stock here. And this company, as you can see here, has got 3 as price to sales ratio. Not too expensive, not too much data from a fundamentals perspective yet. It's a relatively new company here, but looks like they're doing good job here. You could slowly buy them also, given there is a nice gross margin here. So with that, next few companies that we'll talk about is very high valuation. I mean, it's very high RSI and low valuation. So typically when the RSI is high, as you can see here, 66, 60 and a little bit high RSI, that tells you it's not the right entry point here. We should wait for a little more pullback to buy here. But I like especially one here, which I showed here, Vertex. Vertex is a great company. As you can see here, insiders are buying their own share in Vertex here. And look, from a Morningstar grade perspective, they get a grade A from growth, profitability, and finance. That's a very good grade here. So I would wait for this stock to get clobbered a little bit, and then I'll be buying some Vertex here. And other companies are also good here. RSI is a little high for me. I would wait for a little pullback on ACGL, Walgreen, and Perigo. I love Perigo. It's a great company. But right now, I think let's wait for a little bit pullback here, given RSI is a little bit high. So with that, here are a few companies with a high valuation. I like both of these names as these names get clobbered here, like GitLab here and Asana. I will be slowly buying some of them and go from there. Right now, Wall Street does not like them. Look, there is a high valuation here, 45 and 31. That's why there is a rotation from these high growth names. That's why these stocks are getting clobbered here. Otherwise, they're good buys. But right now, Wall Street does not have patience for these high valuation names here. Look, very good insider buy. Insiders are finding the value here. They're buying a lot of their own share here, but I would wait for a little bit pullback here with this Wall Street rotation out of these value names here. So with that, let's jump in here and look at a few more details. What we'll do now is we'll look at one company in a little more detail. First, we'll look at Incyte Pharma, which is a biopharma company with a lot of pipeline. So with that, let's jump in. As you look through here, Incyte, they got a lot of opportunities for the growth here. They got 7 submissions seeking approval, all with the decisions due in 2021. So I think some of these decisions are in the work as we speak, and probably it's almost approved by now because 2021 is over here. So with that, with all these drugs in the pipeline here, I think it's a great candidate to look at, especially insiders are buying. As you can see here, they got multiple indications going on here with the MPN, hematology, dermatology, and they got royalty income coming day in and day out. So with that, let's jump into this company and see if it's worth buying here. So as you look through Incyte here, look from a earnings perspective, as you can see here, nothing significant here. They're up and down type earnings here, which is very typical in the pharma and the biopharma industry. Sometimes they do great, they hit a home run, sometimes they don't do so great. That's why we got to look at these companies and look at the right time to invest. On the other hand, from a sales perspective, I like this clip here. They're doing nice sales, as you can see here, a nice consistent sales growth. That's a good story. And from a shares outstanding perspective, it's pretty same here, nothing significant. I like the way they are keeping the outstanding shares constant. That's very good here. From a quarterly income perspective, I see a clip higher here. That's always good. They're pretty consistent in the quarterly revenue here. Sometimes there's a small dip, as you can see here, but generally they're trending higher. That's always good. And this company is spending a lot of money in R&D, as you can see here. I think these type of companies need to spend money on R&D. Pretty good clip, I would say. Around $300 million every quarter on the R&D is a good amount. And from a net income perspective, as you can see here, it's a net income positive company. That's always good here. Wall Street does not like negative net income companies right now. This company is making money. So from a numbers perspective, this company checks out. It's pretty good, and company is really churning in profit right now, which is always good. So with that, let's jump in here and look at the chart here. From a chart perspective, as you can see here, company is trying to go higher as of now here. Look, stock price is trying to appreciate as we speak here. That's a good sign. And momentum is building up here. RSI is trying to go higher. Right now, RSI is 48. That's good here. There is some momentum here. And as you look through here from an implied vol perspective, very low implied volatility. Right now it's 35, not too low. I would say it's a midpoint here. It's a good right now. And as you look through here from a DMI perspective, which is one of my favorite indicator, from a DMI perspective right now, as you can see here, the blue line wants to come down and the red line wants to go higher. So that's basically a bearish crossover here. As the red line crosses over the blue line, that tells you it's turning bearish. That's a bearish crossover. So I would say that it's a good time to buy some Incyte. A company is doing great. Insiders are buying. There's a lot of pipeline candidates here. Right now it's a bearish because Wall Street does not like some of these names here, but I think it's a good story. As you look through here, from on the balance volume perspective, there are more buyers than sellers. That's why on the balance volume went up. Right now it's flat, as you can see here. And then check in money flow indicates smart money is flowing into the stock right now. That's why from a technical perspective, I think it's the right time to buy some Incyte. Given there is a good pipeline, insiders are buying heavily, and stock is trying to make a move slowly higher, and it's stuck in this Wall Street rotation game here. So with that, I think it's a good time to buy some Insight slowly and go from there. And let's look at one more company here. We look at Twitter. Everybody knows Twitter. We got new CEO here, Parag, who took over from Jack Dorsey. I think he has to prove his mettle here. So he's going to work hard to prove his worth. So with that, let's jump in here and look at this company in a little more detail. From a numbers perspective, as you can see here, this company is not afraid to show negative earnings. As you can see here in the latest quarter, they have some negative earnings here, which is okay for these type of companies. But at the present time, Wall Street does not like negative earnings companies. That's why stock is going down. As you see here, from a sales perspective, nice clip here. They are improving their sales year over year. It's an annual sales number, and shares outstanding is pretty constant here. Nothing to worry about. From a quarterly revenue perspective, I think it's a good clip here. As you can see, they're doing about $1 billion or so on a quarterly basis. Not too bad for Twitter. They're doing pretty good here, and they're also spending money on R&D, as you can see here. New CEO Parag, he was a CTO, Chief Technology Officer. I think he knows the importance of spending money on R&D. I love this clip. In this business here, the Twitter is in. You got to spend money, improve your product capability, so that way you can capture the advertisement and also make sure people can broadcast their ideas properly. From a net income perspective, as you can see here, right now it's a negative net income here. I'm sure the company will improve as we go forward. This company is known to surprise Wall Street once in a while with the negative net income. So with that, I think right now numbers are not superb, but I see a good trend here. This can go higher, especially with the insiders buying heavily, and stock is getting clobbered here with the Wall Street rotation out of growth names here. I think there's a case that can be made to buy Twitter slowly here and take advantage of this big sell-off. So with that, let's jump in here, look at the chart from a technical perspective. As you look through the chart here, we got Twitter. Off late, Twitter is dropping off. As you can see here, after the last earnings, it's dropping off pretty much. So I think it's a good time to really start looking at Twitter here and go from there. And look, from a uh, implied volatility perspective, right now implied vol is around 38 or so. Typically when the stock market drops big time, implied volatility also rises. That's what is going on. Twitter, as you can see here, implied volatility is rising. That's why IV percentile is a little high right now. From a DMI perspective, which is one of my favorite indicator, red line wants to go higher, blue line wants to come down. That tells you right now it's bearish. I think it's good to take advantage of this situation here and slowly scale into Twitter. Don't need to buy a lot of shares. Buy a little bit at a time. This company will do well in the long run. There is some short-term pain right now. And look, from a volume average perspective, right now it's negative. It's going down. There are more sellers than buyers, and the smart money is also flowing out right now. That's when we slowly start buying the stock. Not too much, but slowly, so that we take advantage of this sell-off. Keep averaging down, so that way you can take advantage when these stocks bounces back. They bounce back hard, so that's why you got to buy slowly, especially given insiders are buying this stock heavily. So with that, let's jump in here and look at few low price stocks. So I ask you to look at this carefully, because Wall Street right now does not like low price stocks, especially with the low price stocks with the not good earnings. So that's why you got to be careful here. I will display the list here, but use your judgment here. Don't buy too much of these. You might get hurt, because Wall Street at this time does not like low price stocks. As you can look through here, this is a list of low price stocks. Keep watching here. We got a very high insider buying in all these names. What I've done is I've looked at the low valuation stocks and low RSI stocks, so that way these are a little bit safer candidates. Keep watching the price to sales ratio, all low price to sales ratio. And also from an RSI perspective, we got a low RSI, as you can see here, below 50 here. All these stocks are low price, as you can see here. Many of these are not suitable for many investors, given some of these are below $1, which is very uncertain. So I would say, if you want to look at some of these companies, go after better candidates. Keep watching some of these Morningstar ratings here. Look, some of these companies here, like Clean Spark, $8 stock right now, as you can see here. And this one has got a good C grade in the financials, A grade in growth. You might look at companies like this one. Even though company is losing big time here, there is some hope for the future. So Wall Street at present does not like these companies. That's why you see here it's getting clobbered in 1 day, 5 day, 10 day, all the way. Right now in the short term, there is no sight of this stock going higher. Even in the long term, last 5 years, you lost money if you invested. But if you're a long-term player, you could slowly buy some of Clean Spark, but don't expect any short-term win here. And next could be Select Quote. Select Quote, as you can see here, this company is making money. Keep watching here, net margin positive company. You could slowly buy into the same story here. It's in the house of pain, as you can see here. They've been losing money all along. So that's why you got to be careful. At this present moment, Wall Street does not like these type of companies, low stock price companies that don't make money. So that's why you got to be careful here. And then we got here a few more here. These are high valuation and high RSI. Look, RSI is high here, above 50, and valuation is very high here. For some companies, I mean, these are low valuation companies, but RSI is higher. I would say, wait for these companies a little more, let the RSI come down. But if you were to pick a company, I would say BDSI here. Looks a little better here. As you can see here, it's got a C grade in the financials, a B grade in the growth. But I would say wait for these stocks to come down a little bit, then you can slowly buy them. But because these are low price stocks and many of these don't make money, net margin negative, right now Wall Street does not have any patience for these stocks here. These are getting thrown out, and stock price keeps going down. So that's why you got to be careful. If you want to buy some, look at the ones with a nice net margin positive, probably like Select Quote and maybe BDSI, and then go from there. So with that, I will wrap it up here. Thank you very much. Happy investing and trading. Please subscribe.